Why hasn't Bitcoin followed gold to the heavens? 2025 started out with some bold predictions for Bitcoin, some forecasting a year-end price of $150,000, even $250,000. Well, that never happened. Instead, it ended the year around $90,000, 5% lower than where it was in January a year ago. Gold, on the other hand, shot up 65% last year. Silver was even better, up 158%. There was some lift in the Bitcoin price in the last week, but those who've been involved in Bitcoin longer than most would say, so what? We've seen far more vicious cycles in the past where the price dropped 70, even 80%. So this drop seems a little bit more benign, which brings us to another question. Is Bitcoin merely an asset or an instrument of freedom as it was originally conceived? If that's the case, is price really that important? Well, someone who's been giving this a lot of thought is Karel de Jager, no stranger to the Moneyweb Crypto podcast. He's founder and CEO of crypto analytics firm Silver Sixpence. Hi, Karel. It's good to talk to you again and Happy New Year. Let's start off with a question. Why gold is now outperforming Bitcoin? This is definitely a turnaround from what we've seen in previous years. What do you reckon is behind this and what can we expect in 2026?
Hey, Kieran, it's good to be back. So there's many theories as to why Bitcoin has actually underperformed expectations in 2025, despite going into the year with so many tailwinds pushing it forward. So in my opinion, it's worth just taking a look back at the year and reflecting a little bit. And the following things I think played a role. So first, when the new administration took office in the US in the beginning of the year, there were lots of optimism in the market. Trump promised a regulatory overhaul and a strategic Bitcoin reserve, and everyone was ecstatic about it. But then what followed was a combination of both positive and negative things. On the positive side, the regulatory overhaul was seriously impressive. Trump replaced all of the crypto skeptics in government from the previous administration, including key positions in the SEC, CFTC, OCC, all of their regulatory departments. And he also appointed David Sachs as a crypto and AI czar. And Sachs has made some really good progress as well. He's pushed the Genius Act through, and there's a lot of work that's been done on another bill in the US called the Market Structure Bill, and we expect that to be passing soon as well. So, behind the scenes, we've seen major things happening. But there were some things that also stood out as negative. So first, I think that the Bitcoin Strategic Reserve was watered down significantly into a vague thing that they called the Bitcoin stockpile program. And that didn't turn out to put any buy-side demand on the market. So it didn't have any effect on the price. And then secondly, I think the biggest negative is probably Trump's family and inner circle that used crypto to enrich themselves and pay transactional favors. So some example of those were the meme coins for him and his wife. I didn't like that at all. And then World Liberty Financial, which is the Trump family business dealing in crypto. The pardon of CZ late last year is also felt very suspect to me for various reasons. So these negative, unfortunately, dominated mainstream news, and it overshadowed the immense progress that was actually made behind the scenes. So all major banks in the US are now working on crypto projects because of the favorable regulations, and I suspect that we'll see some massive announcements early in the new year, particularly related to stable coins. I actually suspect that the top 10 banks in the US, the top 10 biggest banks, will all make major announcements relating to stable coins. So, thinking back a little bit about the latter half of 2025, it was quite obvious that most of the price predictions would not materialize, and we'll see, and we actually saw a relatively big drawdown on the price in the last few months, especially since beginning October. I think that the main reason for this negative sentiment was regarding strategy's proposed removal from the MSCI index and perhaps some forced selling. So although but I have to say, put an asterisk there. Last night we saw the MSCI actually announcing that strategy will not be removed from the index, and this is majorly bullish. So a little bit of background on that: the MSCI index consists of a bunch of companies listed on US stock exchanges, which and a lot of the passive funds like endowments and retirement funds and so on just buys the index, so without putting any additional thought into it. So it's a very passive investment index, and strategy was part of that. And of course, we know that any buying of strategy shares results in buying of Bitcoin. And the index actually announced that they will consider removing strategy from it. They announced that in the beginning of October, which is when the price started going down significantly on the same day. So in my mind, it played a big role, but now, the fact that it's not happening is extremely bullish. So then the other thing is that the market has been behaving extremely strange for some reason. We saw these weird patterns where the price would consistently appreciate as the US market enters its close on Fridays. So it will go up on Fridays, and then on Mondays when the US market opens, it would just dump again. So you saw that repeatedly for many weeks in a row. And if I can put my conspiracy theory hat on, I think that there's a large exchange somewhere in the world who's currently underwater and selling user deposits to stay afloat. So I don't think any of this is public yet, but the price candles are showing us that there's a big seller that's desperate for demand side liquidity and has been for the last few months. So in summary, I think my prediction for 2026 is positive. I think strategy remaining inside the MSCI is extremely bullish, and regulatory clarity such as the market structure bill will accelerate institutional adoption this year. Definitely, it will be massive. And once this forced seller, which I think is an exchange, once it's done hitting the red button, I think that organic buy-side demand will take over and push Bitcoin to new highs. Now, so in terms of gold, the 2025 movements actually surprised me. In my opinion, gold is way overbought at the moment. The pendulum swung way too far towards risk-off assets. And I know this because people around me who's never paid any attention to commodities are suddenly trying to get their hands on the metal. And a good rule of thumb is to never buy anything when it's at an all-time high. It's a classic fear and greed index. Always try to find the boring investments, the ones with strong fundamentals which underperformed expectations in the recent past. And at the moment, that's only Bitcoin.
All right, and of course, Bitcoin fear and greed index is quite low at the moment. It's still in the fear territory.
Yeah.
And strategy you mentioned, I mean, that is an interesting play because they have, I think, at the last count, about 670,000 Bitcoin. A very interesting company because of the model that they've adopted in terms of their Bitcoin strategic reserve. Now, the fact that they're not going to be removed from the MSCI index, of course, would be positive, and that possibly accounts for the jump we've seen in price. Not a huge jump, but a significant jump in the last few days. So if we've seen these inflows that we saw last year into Bitcoin exchange-traded funds, ETFs, we're dealing with a different kind of investor, people who are looking for returns, these institutional players. If they start to get cold feet, they don't like where the price is and they start to sell off, that could pummel the Bitcoin price. But do you think that there is some longevity to this? In other words, the people who've invested in these ETFs are going to stick it through and they understand the volatility of this commodity?
So I agree that Bitcoin will actually struggle to absorb such a big seller like the ETFs. They currently hold a significant stake in the total Bitcoin supply. But I actually also don't think that they will get cold feet. I don't think there's any reason for them to do that. There's nothing in the fundamentals that will trigger a massive sell-off from ETF holders, in my opinion. In recent reportings, we actually noticed big sovereigns and wealth funds actually buying heavily into the ETFs, and that's generally passive money. They don't usually sell on short-term trends. Just yesterday, I saw Morgan Stanley applied for their own Bitcoin ETF. So if anything, the demand for these instruments are actually increasing. And I think that the regulatory tailwinds that's coming with the Market Structure Bill and the Genius Act will just increase the demand significantly.
Yeah, of course, we've seen these cycles before, and Bitcoin is notoriously volatile. It's a feature of this new asset. Are you one of those who believes that following the daily or the monthly price movement is a bit of a fool's game, and what we are seeing is, in fact, the birthing pains of a new asset class trying to grow into its size 8 shoes. Do you see it this way, or is there something else at play?
No, I definitely see it that way. I always encourage people to optimize their Bitcoin journey or crypto journey for utility. Now, what I mean by that is I try to encourage people to use their coins. Get comfortable with wallet usage and key management and payments and that kind of stuff before you actually invest all of your savings. This education will serve you very well in the long term. I remember when I just started, which was just more than a decade ago, I invested way too much into Bitcoin, as I suppose most people do. And my investment plummeted soon after I started. It was very depressing at the time. I decided personally to delete all the pricing and exchange apps from my phone and just dive as deep into the technology as I could. So I first invested and then I started diving into the technology. So I watched countless of hours of Andreas Antonopoulos videos back in the day. I read all of his books. I taught myself how to code. I didn't study any formal computer science or anything. I'm a chemical engineer. So I decided to learn how to code, and then I started developing blockchain products actually. Now, that whole journey got me so excited about the future of this technology that I didn't even bother with the price or my investment any longer. And before I knew it, the bear market was over. Everyone on social media was positive again. And I was then armed with a mountain of intellectual property that I could deploy in the bull markets. And that was an incredibly successful strategy. So I would recommend that to anyone, is go through that learning curve before you actually invest.
Good point. You and I are both fans of a book called The Sovereign Individual. That's a book by James Davidson and William Rees-Mogg. They set out a blueprint for those who want to escape the confines of nation states and achieve self-sovereignty. Interesting concept in itself. Because this book was written some time ago, and but how does Bitcoin fit into this whole notion of self-sovereignty, and maybe just explain your understanding of that?
So what's interesting about the book is it was authored in 1998, and they predicted Bitcoin almost exactly as it turned out. Of course, they did not know what it would be called at the time, so they just described it, the authors, as like this internet currency, and that it would be decentralized and it would be outside of government control. And they actually just described it with immense accuracy, almost exactly as it turned out. And one of the main lessons from The Sovereign Individual is that you should be as mobile as possible. It predicts that governments around the world will become increasingly hostile towards its citizens, and it becomes more and more desperate for power. And if you need to escape from such a hostile government, you need to be able to do so while preserving all of your wealth. Now, physical assets actually inhibit your ability to be mobile. If you, for instance, own a property, and that's a significant part of your net worth, you cannot, pack the property in your bag and take the first available flight out of the country. So the book actually portrays this quite well, and it recommends that you position yourself to be as borderless as possible. It recommends that you keep all of your skills and assets in the cloud. And remember, the cloud didn't exist at the time. This was 1998. So it actually predicted it so well. But it said that in future, you should try and position yourself so that all of your skills and your assets are in the cloud. Now, that means that you should try and make your work and your income as geographically independent as possible. Now, we know how to do that. You just do online work as much as possible. And COVID accelerated that quite a bit. But the other side of it is to keep your assets in the cloud. I mean, that's clearly Bitcoin, right? There's no other asset which you can keep into the cloud independent of any specific geographic jurisdiction.
One of the things that they suggest in the book, The Sovereign Individual, is as you said, building income in jurisdictions independent of geography, diversifying your income streams, especially with non-correlated assets. Now, Bitcoin seems to answer that requirement. What else, in your opinion, can people do to build self-sovereignty? You've spoken about working in the cloud, working across borders. What other things can they do?
So I think assets and skills are probably the most important things, and if you diversify or decentralize those two components, I think you're extremely well off. So, and you're probably 99% there. So you should try and optimize your skill set for geographical independence, like you said. This is often misunderstood, to be honest, because I just said, you should keep your skills in the cloud, but that's not 100% correct. Because people then, if I say that, then most people would assume that someone like a profession like plumbing, for example, is screwed because they cannot work in the cloud. But no, plumbing is actually one of the best skills you can have in the future, because water flows downhill all across the world. So you can be a plumber anywhere and you will always have lots of work and demand for your skills, no matter where you are. And something maybe on the other side of the scale is being an expert in something that is truly South African. If you think about an expert in South African law, or maybe you're a South African tax expert or something like that, is extremely limiting, because you can only deploy that skill within a very small geographic area compared to the entire world. So in future, I would say people should optimize for that. What skill can you easily transfer from where you are now geographically to anywhere else in the world, and you can just carry on without too much disruption? Now, it's even better if you are stationed in South Africa and you're already deploying your skills somewhere else. So that means that, online programming, for example, or some sort of consulting to a global audience, and you get paid in something else than the South African rand. Bitcoin, crypto being the best stable coins, I often do that. I always, for international clients, invoice in Bitcoin or stable coins first and fiat second. And then, very last on the list of preferred payment methods, it should be the ZAR. It should, if the client cannot pay in crypto, then you should try and earn dollars or pounds or some other stable currency which you can easily exchange for crypto offshore.
Finally, Carl, let's just wrap up here with, you mentioned in the beginning that you're positive about Bitcoin for 2026. There's also another factor that you touched on there, that all of the banks seem to have crypto projects, mainly built around stable coins, because of the very frictionless way that you can transfer between banks and countries and so on, and very fast at low cost. But for Bitcoin itself, which is the granddaddy of them all, and it really is in a separate category, do you think that we are past the headwinds that we faced towards the end of last year and things are going to start opening up here? The fact that strategy, for example, is not going to be kicked off, the MSCI index being one of them. What about some of the other headwinds? Do you think they're out of the way?
So there's one thing that has become part of this Bitcoin market, which is not the nicest thing in the world, and that is that generally people are too greedy. People and investors are too greedy, and they take on too much leverage. And unfortunately, that makes predictions extremely difficult, at least in the short term. Because I do also believe that, even though I'm extremely positive and bullish for the year that's coming, I think that there's someone underwater that took too much leverage, and especially the price depreciation on October 10th of last year might have margin called them. So what that means, that there's a false seller somewhere selling as much assets as they can, probably assets that don't even belong to them, just to try and stay afloat during this time. Now, how long that will continue, I don't know. I hope that that they are done now, and I think it's only up only from there. There's another metric, which is the Bitcoin price correlation to the M2 money supply. Now, if you look at that metric, for example, it's been extremely correlated in the past, but it broke down in the last few months, I'd say since about mid-2025. And that index, if you look at that correlation, it actually predicts a Bitcoin price, a fair price currently of around $200,000 to $250,000. So we're way below that, right? And there's a massive vacuum now to be filled if that correlation would return. So all of this indicates to me that yes, it's going to be an extremely good year. And then the other thing that you touched on, which is the institutional adoption, I can just tell you, I am in many discussions with banks locally and abroad, and as to what they are doing, their roadmaps, etc., and a lot of traditional financial institutions, regulators, and so on. And the amount of progress that's been made in 2025 is just mind-blowing. And traditional finance are generally slow to make announcements, because they know all of the consequences that goes with announcements and the risks and so on. So even though I expected them to make a few announcements in 2025 already, they haven't. They've postponed that. But, going into 2026, I think once these announcements starts coming out, everyone is going to be massively surprised as to the amount of investment that's been taking place inside this asset class across the world, and even in South Africa. I mean, I cannot. I don't want to stir up rumors or things like that, but I can tell you there's some M&A activity going on behind the scenes as well, which comes from TradFi, and they are ready to spend big in this asset class and deploying large amounts of capital for product development and to try and get ahead of the curve. So, and that's all very positive in general for the crypto industry.
Very interesting. I'm sure we're going to see, as you say, a lot of M&A activity this year. And it's going to be quite an interesting one. It started off a little bit unusual, but here we are. I want to thank you very much, Karel de Jager, who is the founder and CEO of Silver Sixpence. Thanks for your time, Karel.
Thank you, Kieran.